So what type of trader do you want to be? Well, you probably already answered that. Like, I want to be a good trader. I want to do really well. Well, I do too. I want you to do well too. That's the purpose of the course. And I hope the course really helped you to do that and helped you to do that. So we want to all be profitable traders, of course. But there's different, kind of categories of where people fit as far as a trading style. And it's not an exact science, by the way. And it really kind of develops over time. Actually, people sometimes come in saying, well, I want to be this type of trader, but then as they start actually trading, they find that they're maybe actually like and are more of a different type of trader. So the key on that is, and we'll give some examples of these trading types here in a second, is if you're not sure, you don't have to try to have one that fits, right? You can try different ones and see what fits, right? And see what fits. And that's the nice thing about things like with paper trading, where you can practice with fake money. You can try different trading styles that we'll talk about in the next slide and see, well, what fits for you. And if you find you don't like it in the paper trading aspect, well, then adjust it and see what fits you. And you can always change your mind. And life events come up where you might need to change your style because something has changed in your personal life, and you might have less time to devote to trading, or you might have more time to devote to trading, and that can really impact your trading style for sure. And that's where time frame comes in. So again, you don't have to have it like sign right now on the dotted line, I'm this. You can adjust as you go. So what are we talking about here? So if we think about time frames, this is a way a lot of people will define the type of trader you are. And it really is a matter of looking at the time frames on how frequently you're trading and looking at what types of time frames you're using for your analysis, what type of, with your technical analysis. As you recall from way back at the beginning of the course, the technical analysis works no matter what time frame. It's just you need to choose the time frame and be consistent with that as far as then applying the tools. So if you look at time frames, you could be different types of traders, right? So one type was what's called like a scalper, or some people might refer to as an arbitrage. There's different names for all these, by the way, but these are the most common. So a scalper would look at things in minutes, right? They're not looking at days or even hours. They're trying to get little bits of profit and doing a lot of frequent trading, and they're doing scalping techniques and really trying to get in and out of trades real quickly. We had a lesson on guerrilla trading, for example, or guerrilla setups. Really it kind of looks towards scalpers particularly. A lot of people really like the idea of day trading, right? They're looking at minutes and hours. Day trading's been around for quite a long time, and it's a very legitimate way to do it. So they really like to be, this is more, you can almost think of it like their job in some cases, but when they do trading, they're really looking at maybe a full day, and they're looking at minutes and hours, and they're closing their positions each day as far as a classic day trading, definition, so to speak. Swing traders might be looking at time periods of when they're setting up their charts and their technical analysis over hours or maybe over several days. So they're looking for these swings, these momentum changes, this kind of stuff. They're not doing it all within a tight time frame of minutes and hours. They're looking at hours and then stretching possibly out to days. So they're more looking for those swings and getting in and out with buying and selling around hours and days. A lot of people are very common as what's called position trading. You might also have termed like active trading. I like to kind of call it active trading, but it's position trading where you're looking at days to weeks. So you're really looking at those candlesticks with those open and closes, for example, because that's going to give you a full open and close with things like candlesticks or the price bars. And you're really looking at days and looking at weeks as far as time periods, maybe over the course of a one full month, looking at weeks and looking at, as far as position trading. Investment timing, also kind of a form of active trading, but not as active as, let's say, day trading, is you're looking at that time from weeks to months, right? You're looking at individual daily price bars, but you're really looking for those trends to really start become more established over a week's period, maybe even over several months period. And so you might be looking over several months as far as some of these longer term trends that you're looking at. And then a buy and hold investor is less of an active trader where the trading, where the tools come into play is their entry, their buy point. But they're less worried about putting in stop losses. They're less worried about even a security going down real significantly. They're holding for the long term, which could be many, many months. You're really looking at years, maybe multiple years, maybe forever, for example. And they're buying and holding through the big wide ups and downs because they know over time the securities will rise over time, is what they're looking at. But where they get in is when they can use all the stuff you learned in the course. If you figure out you want to be more of a buy and hold, or you have a part of your overall portfolio that might be more buy and hold, and then you have another part that might be more position or swing trading, you can do that too. For your buy and hold part, you might be looking at, when do I buy in? When's a good time to buy in? Is it undervalued, or does it look like a good buying opportunity? So as you see with each of these, this is where people say, well, I'm this type of trader, I'm that type of trader. Using this kind of time frames can help kind of understand, what we're talking about when people refer to that. That's the kind of the idea of the time frames. But the most important part of the takeaway from this is two pieces. One, your technical analysis, your tools, your indicators, and your plan and all that works no matter what type of trader you are, what type of security you're trading on either. It all works. It's just a matter of time frame on there. And also you can practice with your paper trading, and before you decide, to do with real money a certain type of thing. If you think I want to be a scalper and you find this is just too much for me, too much active trading, and I'm getting a little nervous about it, well, then back it down and become a day trader or a swing trader or whatever trader. You can always learn by your paper testing, and then you can always adjust at any period. And that's the last part of this, is you can always adjust in there. So if you went into this course thinking, I want to trade like on this type of time frame, and you find out that you changed your mind, perfectly okay, but very common actually. And that's actually a smart move to do. Don't force yourself to be something that you're not comfortable with, or you're not. Be great at what you are.